All right, so a broader base will be considered by SBI over a period of the next few months, in fact, as this plan progresses. But for the moment, ladies and gentlemen, to discuss how this move is going to lead to democratization of wealth creation and the larger impact of this move, I'm now joined by Harsh Roongta, the founder of Fee Only Investment Advisors, LLP. Thank you very much, Mr. Roongta, for joining us here on ET. Now, our first question is, since everybody's been talking about sachetization since morning, and that strategy has paid handsome dividends, at least for the FMCG sector. Now, when it comes to this segment, the mutual funds segment, what is the impact that you think will this move have when it comes to wealth creation?
So I don't see any reason why the creation of wealth should be the preserve of the elite or even the middle classes. And I think making this product available to the masses is the crying need. The number of investors in mutual funds is very low as compared to the number of people who are online. And I think it is to cross that number that this kind of a sachetization will help. It has brought wonders for the FMCG sector, and I think it should bring wonders for the mutual fund sector because the kind of investors that it will bring are very different than what has existed so far. Uh, these will really be people to whom long-term wealth matters. They are looking for these options. So far, absence of technology, costs of onboarding and servicing were keeping them away from this. I think the dropping of costs in technology, plus I believe that there are uh, some subsidization that has been built in by the regulator in this. At least that's what I understand from newspaper reports. And I think that will really help bring completely different kind of investors. And I think SBI has made a great start by restricting it to balanced advantage fund. It gives the advantage of equity while having some balanced in it, as the word suggests. And I think this is the start of massification of mutual fund investments. So mutual fund सही है, न सिर्फ मिडिल क्लास और अमीर लोगों के लिए, बट एमएफ सही है हर आदमी के लिए, हर भारतीय नागरिक के लिए.
Absolutely, Mr. Roongta, and very well put. This is essentially looking like the massification of mutual fund sector, but it remains to be seen whether this will have the same impact as it did for the FMCG industry a couple of decades back. And now, ladies and gentlemen, I'm also joined by Feroze Azeez, the Deputy CEO of Anand Rathi Wealth. Feroze, we were just talking about how this is going to democratize wealth creation, but my core question to you is, how is this different from the 100 rupee SIPs that are currently existing in the market? What do you think is going to be the larger impact of this? In fact, Mr. Roongta was saying that this is going to lead to a massification of mutual funds.
Yes, I personally think yes, I completely concur, Sumita, that there will be a massification. Mutual funds are actually one of the most structured saving mechanisms. Most of the lower strata who are not in the structured saving system would get appealed by this move. But I personally think that, see, just a change in the amount does not create that excitement for the investor in the short run. So this is more of a structural change, which can have very long-term impacts on how India saves. India has been a great saver, but a very bad investor. You see, people might have gulags in their almeras. They will have a lot of money stacked up, saved in smaller quantums. So India has been a great savers household, but not a great investors household group. And that's completely apparent in the mathematics of the household savings. Last year, if there were 35 lakhs crores of household savings, only 6% or 7% of that went into equity. And 90% of that was debt and physical assets. So India needs to come into equity in a right proportion. So I think that's a great structural change. So in the next 3-4 years, you will see that this specific move has uplifted the SIP number by at least 8-10,000 crores for whatever it would have been, plus 8-10,000 crores is what I would say. This is a structural change, which is a seed sown today, which SBI has taken a lead of.
Absolutely, Feroze. And given that India's structural story has largely been supported by its domestic investors, this is another shot in the arm, or hopefully will be a shot in the arm as far as domestic investments go. But let me ask you another question before I come to you, Mr. Roongta. Now, there are some concerns that how will this plan really be viable for mutual fund companies and their bottom lines, given that there are cost and distribution components as well. Does that really bother you?
Doesn't bother me at all, Sumita. Mathematically, doesn't bother me. Firstly, see, when you're running a business, there's going to be a lot of economies of scale coming in a business like that. Your variable costs are not as high, because in a fund management business, there are, if you look at the balance sheets and the profit and loss statements of unlisted NBFC, AMCs, or listed AMCs, a substantive portion of cost is covered by the incomes from their treasury itself. A couple of unlisted AMCs which I was looking at, they cover their entire cost largely by their balance sheet size earnings itself, because they're good at investing. They've invested their surpluses, and most of their costs are taken care of. So point one I'm making is AMC is a very differently poised business which has enormous operating leverage. If it has operating leverage, now you can say that let me keep adding to my bottom line, or let's reinvest for the benefit of the industry and the Indian society. And that's what SBI has taken lead. And I wouldn't have been, I could have guessed who would take the lead. And SBI, I've heard Mr. Singh, DP Singh, who is the joint CEO, say it in one of the interviews on your channel. When I was there as well, I
Right.
heard him say that I will be the first one to launch it,
Right.
because I don't want to make money in the short term. I want to contribute back to the Indian society, which has made that company what it is.
All right. All right. So essentially, the idea is that it will be extended over a period of time, and of course, the impact that it will have will certainly be a gradual one. Let me come to you, Mr. Roongta. From a market standpoint, how much of a game changer is this going to be, especially in the context of insulating the domestic markets, especially when FIIs move out? Hence, what really explains the timing of this launch?
Well, timing, I would not know. I don't think there is, I mean, this has been in the works for quite some time. So I don't think this is in response to any particular market movements. This Jannivesh thing, we have been talking about this, the consultation paper was earlier, but a lot of work has happened. I just want to add on the costs and the points that Feroze made. See, there are two major costs which were sort of there and are there. One is the cost of first time the new to mutual fund or the new to securities market, really, the KYC. The KYC cost is still pretty high. And I think that is being subsidized. Second is the initial cost for distribution. Please remember that for execution only platforms that are
Can I ask?
technologically enabled, the marginal cost of every transaction is very low. It's the onboarding cost that is high. And I think the
Right.
stickiness of these clients is
Right.
high, will be high, and we will know. I mean, it is only behavior ultimately
Okay.
that will show. But what that does is, because it keeps accumulating,
Hmm.
and this is a recurring income. I don't
Hmm.
think the
Right.
income will be,
Right.
anything inconsiderable, and this won't require
Right.
subsidy once it reaches a critical mass, which I think in the consultation paper they have mentioned
Right.
as 2 years.
Critical mass,
So
Seven, and which is
I
what
hope
essentially you're hinting at, that companies will look forward to longer timelines to actually see the real impact. But one final question to you, Feroze, because we're completely out of time on this particular topic. Now, with respect to inflation, how does the 250 rupee SIP amount scale with inflation over time?
Yeah, I think 250 rupees SIP, I think the number will remain static for long periods of time. Now, inflation could have two impacts. Now, if you're speaking about inflation from an investor standpoint, this is one of these chances to beat inflation because India's allocation, actually, if you compute over the last 10 years, work backwards and interpolate what is India making on the 900 lakh crores of household savings, it is sub 7%, and the inflation has been greater. So, investors who have been sticking to debt largely, now that Nirmala ma'am has given us the permission to choose our investment and there is no tax swaps in the new tax regime. So equity can be something which person can begin. 250 rupees does not give you sleepless nights. So I think it's a great beginning. So now most of India can beat inflation by getting equity into their portfolio without being too worried about the downsides because the amounts are small. And it's always good to start small and conviction builds over time.
Absolutely. Thank you very much on that note, Feroze and Mr. Roongta, for joining us on this edition of